Those are really the three big things that you can do to be sure that you are paying the lowest premiums possible. Maintain your home, protect your credit score, and don't file small claims.
Good morning, everybody. I have the distinct pleasure of having one of my favorite insurance agents, Phil Delgado, who is the owner of the largest insurance company in Texas, Goosehead Insurance. And he has agreed to join me briefly this morning because insurance seems to be on every homeowner's mind and topic of cocktail conversation. Phil, tell me a little bit about Goosehead.
Thank you, Gay. I appreciate your time. Yep, absolutely. You're absolutely correct. Goosehead Insurance is the largest distributor of personal lines insurance in Texas. So homes, autos, cars, we call those personal lines. And my wife, Jessica, and myself own an agency down here in San Antonio, Texas. So Goosehead is nationwide. Largest representation in Texas. There's probably 1,800 to 2,000 agencies out there, independent franchises. And thanks to our tremendous relationships with partners like yourself, Gay, our JB Goodwin family, our clients, and our team, we've built one of the top Goosehead insurance agencies in the whole United States. So we're in the top 1% of our industry. And all that means is we work harder than the competition and we serve with more passion. But I'm excited to be here and share some information, answer some questions for yourself, Gay, and your friends that are following you as well.
So a lot of the questions that are happening now are pretty basic. What does your homeowner's insurance cover? It doesn't cover the land, but what does it actually cover?
That's a great question. So home insurance is going to provide three different segments of protection. Of course, the first one is for your home, the property. We call that the dwelling. That's the structure, roof, walls, flooring, cabinets, everything built in. So that's number one, the home we're buying, just like when we buy it and it's empty and we walk in. Number two, well, the stuff we're going to bring out of our U-Haul trailer and furnish our home with, your furniture, electronics, pots, pans, clothing, everything you put inside your home. That's called contents. And now, lastly, it's going to provide some financial protection in the form of liability insurance, liability coverage. So someone gets injured on your property, or we have a situation where we cause an accident, maybe a kid's in the backyard throwing baseballs and it goes over the fence and hits a neighbor in the eye, breaks their glasses, slices their eye. We have liability protection to protect our assets. The only thing I want to mention there, Gay, is when we go back to the contents coverage, everyone assumes that, well, if I have $100,000 worth of contents coverage, all my belongings are covered. So there's always going to be segments of personal property that are going to have to be insured separately on a homeowner's insurance policy. We're talking about things like fine art, jewelry, and collectibles. Those items are going to be limited on your standard homeowner's insurance form, maybe up to $2,500 for jewelry. And I mean, when you have a $4,000 deductible, there's really no coverage. So you want to schedule that stuff.
How do you decide how much insurance you need to cover?
That's a great question. So when we're talking about the home, the structure, we want to have enough insurance to rebuild the home in the event of a total loss. That's the easiest way to answer that question. If we suffer a total loss, how much will it cost to rebuild this home? We're talking about bricks, boards, cabinets, electrical, plumbing, etc. And so in the insurance industry, we have what are called replacement cost estimators. So these carriers rebuild homes. Insurance carriers like Travelers, Nationwide, Liberty Mutual, they're all rebuilding homes. They know what it costs in each geographical area. And so when we're insuring and quoting somebody, we'll plug in property characteristics, square footage, classification of builder's grade to custom restrooms, kitchens, etc. And then the insurance carrier's platform will spit out a replacement cost, telling us what they feel it would cost to rebuild this home. And that's a really good starting point. But now every insurance carrier has a different replacement cost estimator. Some are super sensitive, and we'll kind of get to that a little bit later. But that's a starting point for an insurance agent to narrow down exactly what a replacement cost should be on a home.
Wow. What sort of things are not covered?
That's a great question. So in Texas and throughout the United States, what we're really talking about there is a policy form. So the contract, an insurance policy is a contract. And in order for us to determine what's covered and what's not, the first place we want to look is at the form type. What type of contract is this? Now, if it's an all risk open peril policy form, an HO3 or an HO5, you're basically going to be covered for everything under the sun except for a short list of exclusions. So your policy is going to have a 50, 60, 90 pages, and it's going to say, hey, Mr. Delgado, you're covered for everything under the sun except for a short list of exclusions. And here are these exclusions. Fire. I mean, I'm sorry. We're talking about the exclusions are going to be things like nuclear war, flood, because that's a separate policy. Intentional illegal acts by the homeowner. These are things that are excluded, right? So on an all risk open peril policy, you have really broad coverage because you're covered for everything under the sun unless the insurance carrier specifically excludes it. Okay. Now, some of the exclusions could be things like a slow leak that you don't notice for 3 or 4 weeks, which is called seepage. Now, while it's excluded on a contract form, a policy, an agent can go in there and endorse it and put it back on there. But typically, those are things that are going to be excluded. Nuclear disaster. It's a smaller list. Okay. Now, on a named peril policy form, you're going to have a policy that's 50, 60, 90 pages, but instead of saying you're covered for everything under the sun, it's going to be a named peril form. So it's going to have a list of perils that you're protected against. And if something's happens, but it's not on that list, you don't have any coverage. That's why we really don't want to go with a named peril policy form. It's more narrow coverage. You only have protection for what is specifically named on your policy. The burdens on the it's better to have the burden on the insurance company to tell you what's not covered, because if they leave something out on an all risk policy form, then you automatically have coverage.
So I think the thing that's on a lot of people's minds these days are the insurance rates seem to be going up, is what everybody is hearing. How do you determine your rates?
Oh, that's a great question. So I'm going to refer to a image in a slide that I have on a tool that we provide our friends, because that's a big question, right? Why is my coworker paying $3,000 for their home insurance and you're trying to charge me $5,000 for my home insurance? It's the exact same floor plan, the same year built, etc. So what we'll do is we'll share this screen that it's going to show us the factors in weighted order that determine how much someone pays for home insurance.
That's interesting. The credit rating of the buyer.
Everything's credit driven, Gay. It's a tremendous lever. One of the biggest levers that is going to determine how much someone pays for insurance, right up there with past claims. Okay. So credit rating of buyer, past claims, age of home.
How do you find past claims, Phil?
That's a great question, Gay. So when we're quoting insurance, no matter what carrier it is, Travelers, Nationwide, Liberty Mutual, we're going to enter the applicant's information in what's called a quoting platform. At some point towards the end of the quoting process, the insurance carrier is going to give us a rough quote, a rough estimate of the cost of insurance. But the last thing they're going to do is ask us to run a claims history report, which is a clue report. Mm-hmm. And we push that button and the system's going to check through LexisNexis to see if the applicant has filed any prior claims on their old home or their previous home. And real important, the seller of this new home, that the seller of the property that your client is trying to buy, well, the insurance carrier is also going to run a claims history on the address. So if the seller has filed claims, if the seller's filed claims, it could cost more, and it most likely will cost more for the applicant to come in and buy that house and purchase insurance on that house because there's a claims history on that address.
So I see you have on here the age of the house. If you have houses that are, 10, 20 years old, I'm sure that's one issue. But what if you're buying a historic home? What if you're buying something that's 50 or 80 years old?
Great question. So the reason the age of home matters is because we're talking about age of plumbing, age of electrical, which could be related to fire. So the older the home, the more expensive home insurance is going to be. The newer the home, anything built within the last 3 years is going to get the best rating. Okay, because the electrical, the The mechanical of the house is newer coating, newer construction, newer materials, and the insurance company assumes it's a better risk, less likely to file a claim. So yeah, age of home is important. Absolutely. It's a real big lever determining how much someone pays for home insurance. I'll give you a quick example. A house that's selling for $200,000 but built in 1950 is going to cost more than insurance on a home that is $500,000 built last year. The newer home, twice the value, is going to be cheaper and more affordable to insure because it's newer.
I'm hearing that the age of your roof is becoming a critical determinant of insurance. Can you talk to me about that rumor?
Sure, absolutely. So when we're talking about age of roof, it's really coming into play in the cost of insurance in this manner. Insurance carriers are tightening their underwriting guidelines. So not every home is eligible with every insurance carrier. They all have appetites. In the business, they call them appetites. We might have a carrier whose appetite is newer construction. We might have a carrier whose appetite is older construction. And as a broker, one of the things and the advantages of being a broker is that you can shop the market to try and find a carrier who's going to offer your client the lowest price. A lot of people are competing for their business. Well, when insurance carriers start tightening underwriting guidelines and making it harder for a home to be eligible for a quote, one of the things they're doing is using age of roof. Okay. In the old days, anything less than a 20-year-old roof, everybody wanted to compete for the business. About 2 years ago, insurance carriers started moving that needle, that threshold, to 15 years. So the majority of carriers want their roof to be less than 15 years old. So now, whereas 5 years ago, 20 companies were competing for a house that had a 20-year-old roof. Well, today, if that house has a 20-year-old roof, now insurance carriers are saying, no, our cutoff is 15 years. Now we might only have 10 companies competing for that age of roof. And even today, there's carriers who will not issue new business if the roof is more than 5 years old. So anytime there's less people competing for the business, the pricing isn't as good. So that's really the main way that roof is coming into play of how much someone pays for insurance. Because now if you're ineligible with this company because of the age of the roof and that company's offering the best premiums, you don't have that option anymore. So insurability is huge.
What else was on that list?
In terms of what we think some viewers might want to listen to or want to know?
Yes.
Okay, yeah. Well, so I know one thing that a lot of people ask us, Gay, both sides, is how can I lower the cost of my home insurance? Is there anything I can do
to lower my premium?
Yeah, and so absolutely. So this ties in with the tightening of underwriting guidelines. The first thing people need to do today is maintain their home. Maintain their home to be sure it is insurable. Because here's the thing, you can't shop around for insurance if the minute you switch companies, they're going to come out and do an inspection and cancel your insurance because your roofs are either touching your roof or they're overhanging your roof line. Number two, age of roof. If your roof's 15, 20 years old, and then you try and switch insurance and the insurance agent misrepresents the age of your roof because maybe they're under pressure to sell more insurance. So you switch insurance companies and then they come out and do an inspection after the policy's issued and they find out that your roof has worn shingles, right? The granular loss, maybe some lifting shingles. And then they send you a cancellation letter. What it's going to say is something like this. After our inspection, we determined that your roof needs to be replaced. You have 30 days to replace your roof or change insurance companies. It's like, well, dang it. I just left my old insurance company to try and save money. Now, I thought I was going to save money, but my house is not in insurable condition. And it's too late to go back to my old company. They're going to re-rate me and start the quoting process all over again. So number one, make sure your house is insurable, maintained, so you can shop insurance companies. Number two, the thing that you can do to be sure, the number two thing you can do to make sure you're not paying, that you're getting the best rates, is to improve your credit score. Credit is a tremendous factor on insurance. So the higher your credit score, the less you're going to pay for insurance. The lower your credit score, the more you're going to pay for insurance. This is why neighbors are paying different prices on insurance with the exact same insurance company and the exact same floor plan. The same reason it comes into play in auto insurance. We sell home and auto insurance. And the reason your neighbor, your coworker pays maybe more or less for their 2019 Honda Accord than your 2019 Honda Accord is because we have different credit rating. So I'm not a credit repair analyst, but I know three things for sure that are common knowledge. Number one, you got to pay your bills on time. And then we're talking about how to be sure that we're protecting our credit score. Pay your bills on time. Number two is don't close out old credit cards, right? If you pay them off, leave them open. Do not close them out. You need some accounts that are been open for a long time. And then number three, they say that only carry a 30% balance of whatever the bank is allowing you to borrow on that credit card. If you have a $10,000 credit limit, don't charge up more than $3,000 on it. So those are maintain your home, make sure your credit is as good as it can be. And then number three, don't file small claims. A claim stays on your record for 5 years. So people say, well, Phil, what's a small claim? Look at it this way. If I have a water leak at home and I file a claim, that water claim is going to be on my record for 5 years. My home insurance will probably go up about $300 to $400 a year. So $400 times 5 years is $2,000. So I always tell folks, hey, if the out of pocket is less than $2,000, or if you're going to net less than $2,000 on a claim, me personally, I probably would not file that claim. I would consider that a small claim. Those are really the three big things that you can do to be sure that you are paying the lowest premiums possible. Maintain your home, protect your credit score, and don't file small claims.
So to change subjects a little bit, this year we've had these horrendous fires in California and the horrendous hurricanes in Florida. And how are those going to affect the premiums for Texans?
Yeah, that's a great question. So two things are going to come into play. Number one, it's going to be impossible for these insurance carriers to recoup the losses, the billion-dollar losses in California alone. So people say, well, why are my rates going up? I don't live in California. It's just the nature of the beast, right? It doesn't seem like it's fair because different states, even different zip codes, do pay different premiums. So they are paying more in California to offset the risk. But in business, if you can't recoup your losses in one area and you have clients and relationships outside of that area, there's going to be a little bit of an uptick in premiums across the whole portfolio and across the nation. And the way that we're going to justify that is because this is just proof of the increasing occurrence and severity of natural disasters. And if it's happening in California, there's a risk that it can happen in Texas. There's a risk that it could happen elsewhere. So we'll use that perceived risk as justification for increasing premiums across the nation. So yeah, it'll have an impact based on premiums going up, and it's also going to give insurance carriers another reason and another justification for tightening those underwriting guidelines. We were talking about this before the podcast, the interview here, Gay, of, well, we all used to be really focused and concerned about flood zones. What flood zone is this property in? Well, now there are fire zones. And when we're quoting properties in Bexar County, in Comal County, in Williamson County, we are getting declinations based on fire zone, the likelihood and risk of fire, brush fires in this area, in this zip code. So again, these underwriting guidelines are just going to getting more tighter and tighter because insurance carriers really are risk averse right now. They don't want any additional risk. So it's going to be harder for folks in those areas to get insurance. And if they do, they're going to pay a premium for it. So those are some of the ways that the fires in California are going to affect us over here. Insurance carriers are just going to get ultra sensitive. That's it. And prices are going to go up. And
I think, being able to shop for your insurance early in a real estate transaction is important because in a real estate contract, when you're buying a house, if you're taking out a mortgage, you're always focused on the buyer getting buyer approval, and you're focused on the lender and the appraiser, making value for the house. And there's a third leg to that stool, and that is the property has to be insurable. And so many people wait till the last minute to shop for their insurance, and they really need to be doing that at the same time that they're filling out their loan applications, at the same time that they're telling the lender to go ahead and order the appraisal, because all of these things that you're telling me could, turn into a denial of insurance, or somebody reviewing the property and saying it's uninsurable. Oh, it's got a 30-year-old roof and the property's uninsurable, or it's a very vintage 1930s house, with knob wiring and cast iron, and it's going to be hard to shop for someone to get insurance. So
that's a great point.
Having a resource like you can really help make that a smooth, successful win for the buyers.
Sure. And that's probably going to segue us into a little bit of I have a couple great questions I'd like for you to hear your response on, but you're exactly right, Gay. When folks are getting qualified or approved for a house, they're really talking about budget. How much house can I afford? That's what a mortgage lender is going to look like. What are your debts? What kind of monthly mortgage payment can you afford? And that'll determine what level you're approved at so that Gay can take you shopping. Well, one of the factors that goes into that monthly mortgage payment is going to be home insurance.
Yeah, it's principal, interest, taxes, and insurance. That's part of the PITI that qualifies a buyer.
Yeah, and which ones of those are not variable, right? I mean, obviously based on the actual address, the property taxes are going to vary. But once we lock in on a home that someone has fallen in love with, the property tax is not variable, right? We can't adjust property tax.
And the principal and interest will remain the same over a 30-year mortgage.
That's right.
But
So
the insurance.
That's the only piece of the puzzle that can be tailored and crafted and trimmed to make the whole puzzle pieces fit together. And when a lender's qualifying or approving someone to see how much home they can shop for, they're estimating the insurance cost because there's no address yet. So they're using $200 a month. Okay, that's fine. That's $2,400 a year. But if someone falls in love with a home, they wait past the option period, which is the first 10 days of a contract. 10 days before closing, they're ready to shop for their insurance, and they find out that the seller has filed 3 water claims in the last 5 years. That home's going to be ineligible with 75% of insurance carriers on the planet. If an insurance carrier does decide to take this risk, the premium is going to be about $400 a month, not $200 a month. Now, this client that we've been hauling around in our house, that we've been carrying around in our car for the past 2 months trying to find that home of their dreams, they've fallen in love with this house. They paid $800 for an inspection. We're out of the option period. 10 days before closing, we find out that because the insurance has gone up from $200 a month to $400 a month, they no longer qualify for this home. Okay.
Well,
we call that.
It's a terrible situation, but the only good thing about the contract is that, it's good for the buyer, not for a seller, is that if the property is not insurable, the buyer can get out of the contract and get their earnest money back. So a seller really should want a buyer's agent to encourage a buyer to get insurance earlier in the process. I guess, what could that buyer do to lower that monthly premium? Would it be raise their deductibles?
That would be the first lever, right? Raise your deductible from 1% to 2%, from 2% to 3%. Some lenders allow up to 5%, which of course we know is dangerous and not really ideal. But that's the first lever, is to increase your deductibles. You can responsibly trim your coverage. And what do you mean responsibly trim your coverage? Well, what that really means is, if someone's in a position where they need their insurance budget is tight, what we're going to do is we're going to explain every single coverage, what it means, what it provides protection for, and how much we recommend. And then we'll ask them if they're comfortable reducing it from, say, your water backup coverage from $20,000 to $10,000, right? And so that's how you responsibly trim coverage. Just means, educate the client, make sure they understand what they're doing, and then allow them to make the decision that's best for their family. And of course, you say, well, what do we do now? Well, at renewal, you can increase your coverages once you get all your budgets lined up. Once you know what your utilities are going to be, once you know what your expenses are, typically at renewal, you can increase your coverage. there's a misnomer that people can change their coverage after closing. That's not always true. Matter of fact, with most insurance carriers, they're going to make you wait till renewal to change your coverages. So it's very important that you get connected with an insurance agent who has resources from the very beginning. And the right time to do that, you hit the nail on the head, Gay, is during the option period. As soon as your offer is accepted, let's get the inspection and the insurance taken care of, because that's a negotiation period.
Here's a question I just thought of. We've been talking about people buying a home that would be their homestead. What if someone is buying a home because they're looking for investment property or a rental home, for example? I'm not sure if, Airbnb, but I'm thinking about a true traditional home that they purchase for tenants to, live in on a, 1-year lease basis. Are those rates significantly different?
They're not significantly different. Where the market is right now, many insurance carriers are moving away from insuring tenant occupied properties. Technically, they're called dwelling policies. DP3 program is a tenant occupied insurance policy. So a lot of carriers are getting away from offering new business to tenant occupied. They only want to insure primary homes because they're trying to reduce their risk. So from the standpoint of there's less options to shop around, again, that's going to play a factor in how low of an insurance premium we can find. The less amount of people competing for that business, then the higher the insurance premium is going to be. Again, it's just maintain those rental properties, right? The roof has to be in good shape. Trees have to be trimmed away from the trees. No cracks in the driveways, rotten siding, eaves, those stuff needs to be maintained. Absolutely. I got a question for you, Gay. Tell me a little bit about, you've got a tremendous history and reputation as a real estate professional. How many years have you been operating in the real estate marketplace and where?
I have been doing full-time residential real estate in Austin, Texas for 25 years. So I've seen a lot, done a lot of transactions. And so you see a lot of the complications and you have to navigate and anticipate how to get through them, which is one reason why I wanted to make sure that we focused on the insurance aspect of a real estate transaction today.
Sure. I'm sure your goal is to deliver what a memorable client experience, a controlled, predictable transaction, and you realize that insurance is a big part to making that happen. Tell me a little bit about the insurance market in Austin right now, because we all hear stuff on the news and you can't believe everything on Google, certainly on TikTok.
You mean the real estate market?
That's right. The real estate market. Tell me, now we've talked a lot about the insurance market. Tell me about, if someone's watching, tell us what is, from your perspective, a professional with experience. Tell me about the real estate market in Austin, Texas right now. And of course, right now we're in February of 2025. And you can talk about.
Well, in my 25 years, I've seen several recessions and several, recoveries. I would say the last few years have been the biggest roller coaster that I've ever seen, and probably that most people would testify of the lifetime of real estate. And that's because we have gone from a normal market to that 2020 COVID market of 2020 and 2021, where we had about a 2-week supply of homes. And that meant people were paying way over the asking price in multiple bidding wars, which was really sad. We are back now down to a point where we have about a 4-month supply of houses. So you're not going to have as many people bidding on a property. We have the highest inventory we've seen in probably 10 years. So that is actually good for buyers. They have a huge amount of properties that they can look for now, and they have a little bit more leverage against those sellers that a few years ago said, eeny, meeny, miny, mo, there are 20 of you, I'll take the one that paid me 20% more in all cash. We're looking at about 10,000 properties total. If you're looking from, Round Rock all the way down to San Marcos, what we call the metropolitan area.
Okay.
For sellers, it's taking about 75 or 80 days to sell those homes. And that's not the 2-week supply of homes that they were used to back when we were having the COVID market. So sellers need to be really conscious of where they're pricing that house. They can't be too greedy about it. But if a seller needs to sell, they should have a huge equity gain, which is not something that we've experienced in previous downfalls. But a lot of houses literally doubled in value from 2019 to 2022. And of course, now we've had a downtick of about 15%. And I think 2025 is going to be a really stable year. Last year, everybody was anticipating the Fed was going to continue to drop rates. And for a moment there last summer, they dropped to 5.9 and 6.25. They've crept back up to 7%, and I'm seeing mostly 6 and 7/8 and 7% now. And because the Fed now is saying they don't anticipate dropping any rates in 2025, I think a lot of buyers are realizing, okay, I've put off buying thinking that rates were going to drop. I think rates will stay at 7%. I need to get into that market now. I need to buy that 7% interest rate. And quite frankly, for those of us that are older and more experienced in this business, 7% is the average for 30 years. And not to age myself, but we bought our first house in 1980 with city bond money at 15%.
Wow.
And refinanced it down to 12 and 9 and 7. And by that point, it was paid off. But 7% is not a bad interest rate. A lot of buyers are buying interest rates down in bulk so that the first-time buyers can afford to get into this market. The median and average price in Austin is, depending on what county you're in, it's, 500 to 550,000. Well, you get a lender to run the numbers on a $500,000 house at 7%, and you've kicked out a major portion of the home buying market. But that's what I think is the market in a nutshell.
Well, that's good.
4-month supply to look for, and 75 days to sell something, and the highest volume of opportunities to buy that we've seen in a long time.
Yeah, and the rates are average, and the average price value of a home in Austin has come down from last year or from the previous years, right?
Yeah, we had a high. They've come down. I think we have a very stable price point right now. If they're going to go anywhere, they'll go up or down probably 2 or 3% this year.
And that's one of the downfalls or the negatives, in my opinion, of all this social media and the fact that anybody can just make a 15-second video is so much focus on rates. Gay, we bought 4 houses, and the first 3 I bought before I was in insurance, and I can honestly say I don't even know what interest rate we bought them at. It was a matter of what was the monthly payment and could we afford it, and is it better than renting? So is that still probably a way that folks should be looking at it, is what's the monthly payment?
I think that has a lot to do with it. If they can say, I can buy something and build equity for the same amount of money that I've been spending on rent, right? Quit sending the landlord to Hawaii every year, build your own equity. But you take what your payment can be, and you find a neighborhood that works for you. You find a price point that you can afford, and make that first step and buy that first house. That first house is never the forever house. It's the house that builds you that initial equity that helps you to be in that market. There's always a saying, when's the best time to buy a house? 20 years ago. When's the next best time to buy a house? Right now.
That's something that is not preached enough, because think about the folks who are buying their second and third home. Why do you think they have to sell their previous home before they can buy a new home? Because there's a payoff when you sell that previous home, right? It's an equity building asset. So if you don't take that first leap of faith, you never start building that piggy bank to go ahead and take the next step and buy that second home.
The greatest wealth built in the United States is in real estate.
Yeah.
And I know that sounds way too simple, but that's just the fact. Real estate is a wonderful investment, and you need a lot of partners to be able to do that. You need a good lender, you need a good insurance company, you need a good realtor. And if you have that right kind of a team, you can be very successful in
Yeah, and I want to stress something. Like you said, you said find out what payment you're comfortable with, and then you have to find out what neighborhood that payment is in, and that's why people need a professional realtor with experience like yourself. Because hey, how much time do they want to spend, or do they want to make a mistake going into the wrong neighborhood? So that's the benefit of working with a professional realtor. So I'm going to ask one more question, Gay. I know that JB Goodwin's a tremendous company, a tremendous resources, support, and training. But and I know you're a professional, and you love helping people and serving. Matter of fact, I think helping others is one of JB Goodwin's missions. Helping people. So if someone's a new realtor, because we're going to have some people in real estate watching this. If someone is a new realtor, Gay, you being in the business, reaching the level of success that you have, professionalism, what would you tell someone who maybe has getting into the real estate business in the past 6 months, or even today? What is the two things, the activity and the mindset required to reach a level of success? What type of activity and what type of mindset can you recommend?
So if you talk about activities, these are the activities. You have to have goals. There are 3 priorities in real estate, and they all start with the letter P, just like Puckett. The first one is prospect. So the reason our brokers, motto is help people, is your job every day is to find people that need help. That's called prospecting, but I prefer to call it helping people. You have to find people that need help. Do they need a place to lease? Do they need to buy a house? Do they need to buy investment property? Do they need help because they want to refinance their property? Do they need help because they want to change insurance companies? Do they need help protesting their taxes? Whatever it is, there are people all the time that need help. There are 3 things people need: food, clothing, and shelter. And our job is to help people with shelter. So we call that prospecting. The other thing is you have to have property knowledge. To be a good realtor, you have to know where are the builders and what are they building and what price point is it in? What are the different neighborhoods? What are the schools? How much inventory is there? If you're out in Dripping Springs, it costs one thing. If you're in Georgetown, it costs another. If you're in Pflugerville, if you're out in Hutto, if you're out in Northwest Hills, all of these neighborhoods offer a different feel, a different school system, different pricing, different housing, different ages of housing. So you have to have property knowledge. Go on the tours of houses, go to see open houses, hold open houses, go to the builder sales reps, but learn property. So you have to do prospecting and you have to know property. And the third thing is you just have to practice.
What's that look like?
What does practice look like? Practice looks like you have to set your goals every day. You have to get up and be disciplined. You mentioned mindset. Mindset is a huge thing. What goes on between your 2 ears is vital. So, what are you reading? I just finished a book called Unreasonable Hospitality. It's about, giving just super service. I'm reading a book right now called Atomic Habits. How do you get better at each little thing incrementally? How do you set a habit? You have to do it consistently so that it now becomes a habit that's just automatic. Mindset starts with getting up in the morning. What are you going to do? Are you going to get those endorphins going because you went out for a walk? Are you going to eat healthy? Are you going to listen to a podcast? Are you going to, read the Bible? Are you just, whatever you're going to do, you need to be able to wake up and say, I love today. I love myself. I love what I'm going to do. And that attitude comes across and it gives you energy and it helps you get through the day and it helps you help other people.
That's awesome. I mean, that right there is kind of the big nugget, talking about someone who's been a residential real estate expert for 25 years and not resting on our laurels. The competition's always nipping at our heels, but we're always striving to reach our God-given potential. So to me, hearing from someone who's been in this so long and who has already achieved a level of success is still putting in the daily work to fulfill their God-given potential, to be the best version of themselves that they can be. I mean, that's the real answer, right? It's just continue working, never stop working on yourself, working on your craft. And it seems like you're in a great space and a great environment there at JB Goodwin to do that. So what a great fit.
I think you and I are both very blessed. We love what we do. We're good at it because we've been doing it a long time. And we are in the best city, in the best state in the whole United States, Austin, Texas.
Absolutely. Absolutely. You know, you're absolutely right. Texas is the best real estate market in the United States. And you mentioned all the cities and towns around Austin that you have knowledge of. And of course, as an insurance professional, we write all over Texas, from the Red River to the Rio Grande, from Louisiana to El Paso. Real quick, I'm going to share where these folks, if there's anyone watching that wants a copy of this little resource that I have. It's called a mobile slideshow, and it talks about what a strong insurance policy is, and it talks about the costs that determines home insurance. So that's the website that folks can get more information there. So I wanted to be sure that I shared that. Gay, thank you so much for having me on, giving us time to chat. You always sharpen my blade. And hopefully I've just been blessed to be trusted by you to serve a small part of your tremendous real estate business. So thank you so much.
I really appreciate your doing this with me this morning. So many of my clients have spoken so highly of you and how receptive your people are, how quickly they respond. I mean, it's just amazing. Your company really stands above so many other companies. And your service is really spectacular.
Well, I appreciate that. And I put your phone number up, but go ahead and tell folks how they can get a hold of you, Gay.
They can call me on my business cell phone, 512-917-1542, or you can text me, or you can email me. My email is easy. It's gay@gaypuckett. And Phil, how can they get hold of you?
Oh, thanks for asking, Gay. So our number here at the Phil Delgado Agency is 210-899-3800. My wife Jessica is the co-owner and our sales team manager. So her email is jessica.delgado@goosehead.com. So man, we would love the opportunity to serve you guys. We specialize in helping folks save $1,000 on home and auto insurance, and of course on the real estate community. We specialize in adding value to realtor and lender transactions, and that's what we're passionate about, making you guys look like all-stars.
We're both a vital part of a real estate transaction. Thank you, Phil. Have a wonderful week.
You too, Gay. Be blessed. Thank you.